Welcome to my YouTube channel. Today we are going to focus on ordinary share capital and retained income. But first, the question paper that I am holding is 2019 question paper. And as you know, guys, those time 2019 there were no paper one and paper two. So from the question paper that I have, I highlighted what we are going to do today, right? So, I'm going to start with ordinary share capital. Let's go for the question paper. Let us not waste time. Ordinary share capital, which is 4.3.2, right? Okay. So I have highlighted this information because we are going to use a ordinary share capital. You see here we have balance at the beginning and balance at the end. And guys, please, this thing it is important and easy, guys. So these marks you must get them. You must just take them into your pocket, guys. This 6 marks, it is not that difficult. This thing is it is not difficult, guys. I'm going to show you how we are going to deal with the whole thing here. Okay. And so ordinary share capital, we have balance at the beginning. Okay. So firstly, before I go any further, our financial year starts on the 1st of March 20. Okay. Oh, it starts on the 1st of April 2018 and then ends on the 1st of March 2019, guys. Okay. So we have the balance at the beginning and balance at the end. As you can see, guys, this is very important to note, guys. We have balance at the beginning and balance at the end. So meaning we won't have so much calculations to do. What you have to do is to find what we need. So I'm going to go through what I've highlighted here. So this is the information that we are going to need or that we are going to use in order to calculate ordinary share capital or complete ordinary share capital note, guys. Okay, shares and dividends. The company has an authorized share capital of 8 million shares. Okay, the company had 1,200,000 shares in issue 1 April at 2018. So at the beginning of the year, we issued 1,200,000 shares. Okay, I hope you guys you see that this is not difficult as you read information here. Okay, 150,000 shares were purchased on 13 November 2018. EFT payments totaling 825,000 were made for these shares. So this total is going to go to, we are going to take it to um, cash flow, the total, we're going to take it to cash flow. But what we need is the average share price. We are going to calculate it as you're going to see it how, but we have the number of shares at the beginning of the year and the total cost of the shares at the beginning of the year, which means we are not going to struggle to get the average share price. Okay. Then 850,000 additional shares were issued on 30 September 2018. So okay, we issued 850,000 shares on the 30th of September 2018. I'm going to go back to information A. Okay, so right now that we have balance at the beginning and balance at the end, we're just going to record them in our answer sheet, guys. So we're just going to record them in our answer sheet. So balance at the beginning, we have how much? 4,800,000. 4 million. Let me make it Okay, like this, 4,800,000. And for balance at the end, let me see, we have 9,300,000. We have 9,300,000. We are just going to record them because they are given there. They are given there. Okay, so right now that we have the total cost of the shares at the beginning and at the end of the year, so we are just going to find the info about this column, the shares, the number of shares that were traded during the year, right? Okay, so we are going to go through our question paper. So there is a the company had 1,200,000 shares in issue 1 April 2018. Remember, guys, our financial year started on the 1st of April 2018 and ends on the 31st of March 2019, which means the number of shares at the beginning of the year is 1,200,000 shares. So I am going to record it in my answer sheet. 1,200,000 shares. It is my shares at the beginning of the year, guys. Yes, so I am going to go back to the question paper. Okay, and they said 150,000 shares were repurchased on 13 November 2018. So on 13 November 2018, we repurchased, the company repurchased 150,000 shares. So 150,000 shares, we are just going to record it in our answer sheet before we calculate our average share price, right? Then we is 150,000 shares. Sorry, guys, 150,000 shares. Okay, so now that we have the total cost at the beginning of the year and the number of shares at the beginning of the year, we can calculate our average share price with these two amounts without stressing ourselves. What are we going to do? Because they gave us the total there. As you remember, they gave us the total that was paid for the shares, which is 825,000. So for this one, don't stress yourself and say, what I'm going to do because they gave us the total what? I mean, which means I have to calculate this and this. No, it is easy because you have your total cost at the beginning of the year and your number of shares at the beginning of the year. So it is simple, guys. We are just going to say 4,800,000 divided by 1,200,000. Okay, let me share my calculator so that I can calculate with you guys. We are going to say 4,800,000. Sorry, is 4,800,000 divide by the number of shares. Guys, remember, for this one, we say, okay, let me firstly calculate this one. So our average share price is 4 rands. So meaning we are going to find out the total cost of these shares that were repurchased with that 4 rand that we got, right? That we calculated, right? So I was telling you guys, remember guys, when you want to calculate the share price, the price per share, you just take your total cost and you divide with the number of shares, guys. That is very simple. So we have our, let me write here, it is 4 rands so that we can see. Okay, so it is 4 rands, guys. So we are just going to take 150,000 shares and multiply it with 4 rands. Then that will give us the total or the average cost for the the average cost for the shares that were repurchased. So we're going to say 150,000 multiplied by 4 rands. Let me put 2, but it's fine. Then it is 600,000. So we repurchased the shares by how much? 600,000. So I am going to record my 600,000. Okay, sorry, 600,000. Remember, guys, when we repurchase, we put it into brackets because we are going to subtract it, because this part does not it does no longer qualify to be counted as the number of shares in our company, right? So right now that we have the balance at the beginning, the shares that were issued at the beginning, and the repurchased shares, now we have to find the shares issued during the year. Okay, let's go to our question paper. Let's see what do I say. So they said 850,000 additional shares were issued 30 September. Okay, 30 September 2018. Okay, they were issued 30 September 2018. And for this, guys, I see that my date here is 30 November and 30 September. It is easy, guys. Don't just stress yourself and just say I got everything wrong, guys. No, we are going to reach the final answer that we need, guys. So this is the simplest way to do it. Don't mind the date, because we are going to find how much is our shares at the end of the year. So I see here we have issued additional shares before we repurchased, but it is this, guys. Don't stress yourself. Okay, we are going to come to final answer. Don't worry, guys. Okay, so we have 850,000 shares, right? So right now that we have 850,000 shares, so we are going to say 1,200,000 shares, subtract 150,000 shares, and add 850,000 shares. So we are going to say 1 million. Let me share my calculator with you. 1,200,000 shares plus let me put 1,200,000 shares plus subtract first, subtract, because we've started with the subtraction. Subtract 150,000 shares, sorry for that, 150,000 shares, and add 850,000. Seems like okay, and that gives us 1,900,000 shares. So now that we have 1,900,000 shares, we are going to record it in our answer sheet. So it's 1,900,000. So as we see that we are not given any information regarding the share price or price per share of the shares that were issued. So we are just going to say 9,300,000 plus 600,000 minus 4,800,000. What was added, we are going to subtract it, and what was subtracted, we are going to add it. So this was subtracted when we're going down. So when we go up, we're going to add it. Then this one was added when we're going down, and when we go up, we're going to subtract it. So we're just going to say 9,300,000. So this is a balancing figure. This is balancing figure, guys. This is balancing figure. We're just going to say 9,300,000 plus 600,000 minus 4,800,000. thousands. Let me share my calculator with you guys so that we can do it. It's 9,300,000 9,300,000 plus that 600,000 that we have repurchased, and then subtract that one at the beginning of the year, 4,800,000, and that gives us 5,100,000, meaning 5,100,000. It is the amount of money that we got when we were issuing 850,000 shares. We said is 5,100,000. Sorry guys, it seems like I'm making so many mistakes. It's 5,100,000. So when you want to calculate each and every price that were calculated with here, you are just going to say the total cost divide by the number of shares. Remember guys, always remember guys, this is important. When you want your share price, you are just going to say total cost divide by the number of shares, and that gives you price per share or share price, right? So now that we are done with root number 7, ordinary share capital, we are going to I'm going to share with you, I'm going to share my screen with you. Doing this one, I've highlighted again retained income. As I said, that today's question paper, this question paper, it is 2019 question paper, so it does not have paper 1 and paper 1 and paper 2. It is just 300 question 300 marks question paper. So I've highlighted this one as we're going to focus on it. Retained income note to the balance sheet. Guys, this is 12 marks. You must put these marks into your pocket. All of these 12 marks, you must put it into your pocket, guys. Like I'm telling you. Okay, so let us go for the question paper. Information is a share capital. Okay, so out of this information, we're only going to focus on this one because we're not preparing ordinary share. We're going to focus on this one of the repurchased. On 1 October 2018, the company repurchased 60,000 shares at 9 rand per share. So meaning 9 rand per share, it is the total price that we're going to take into cash flow statements. So they say the average share price at the time was 8 rand 4 cents. So meaning 8 rand, 04 cents. It is the average share price. Guys, remember when we are preparing retained income, we are just going to record with the price that is above the average share price. So average share price, it is going to assist us to find how much, or to calculate how much is the price that is above average share price. Okay, then information B, dividends. We're going to use it because we're going to calculate the dividends that we paid in the year, the one that we paid and the one that we declared. Okay, so interim dividends of 25 cents per share were paid on 15 September 2020. And remember guys, for this one of interim dividends, if you're not giving interim dividends and in your information from the extract from accounting records or trial balance, if you see any information that says ordinary share dividends, just know it is your interim dividends. And for this one of final dividends, if you see shareholders for dividends, just know it is your final dividends, guys. So they said final dividends were declared on 28 February 2019. You see this one, they did not tell us anything that regards with the cents that were paid per share. So meaning we are going to find our answers our answer when we go through the information. Okay. Then extract C or information C, extract from income statement for the year ended 28 February 2019. And remember, guys, our financial year starts on the 1st of March 2018 and ends on the 28th of February 2019, guys. Okay, so I highlighted this information with regards to income tax because it is what we're going to do when you're calculating net profit after tax. Here we are focusing on retained income note. Okay, so now that we have income tax and they told us is 30% of net profit, they did not tell us 30% of net profit after tax or 30% of net profit before tax. And guys, remember, note that net profit before tax, it is always 100%, and net profit after tax depends on the percentage of income tax. So meaning here our net profit after tax, it is going to be 70% because we said 100%, which is net profit before tax, subtract income tax, which is 30%, and that gives us 70%, which is net profit after tax. And they gave us the amount of income tax that was charged, which is 293,100. That is simple, guys. Like I told you guys, this is just remarks. Then I highlighted this one because we're going to need it, retained income. So we are giving the balance at the beginning of the year, but not at the end of the year. So it is simple, guys. If you are giving balance at the beginning of the year and you're not giving balance at the end of the year, because you're just going to start it on top and go with it to the bottom, right? Then I highlighted this one, this shareholders with dividends, because remember, guys, from information B, they just told that financial dividends final dividends were declared on 28 February 2019. So meaning, like I told you that shareholders for dividends is your final dividends, meaning we're just going to take this one of 206,800. Okay, so now that I have discussed with you the information, I am going to start from the bottom. Let's see. Okay. It seems like my PC is now going to shut down, but let me please excuse me. Let me choose my PC. It is now going to shut down. Okay, we are back. We have this information. So I said I'm going to start it on the beginning. So we have retained income, which is we have 141,500, which is the balance at the beginning of the year. So let me go and record it in my answer sheet. Balance at the beginning is 141,500. 141,500. So 141,500, it is my balance at the beginning of the year. It is given, right? Then I want net profit after tax. Like, guys, the format of this notes, just put it into your heart. Know it by your heart, guys, because some of the things they will not be given and you will be expected to fill in that column of details. I will show you. So I'm coming with this with this one of income tax, but I have to calculate net profit after tax. So I am giving income tax, which is 30% of net profit. So in order for me to find out how much is net profit after tax, I'm just going to say 293,100 multiplied by 70 divided by 100. And guys, remember, what we need, we put it on top, and what we have, we put it in the bottom, on the bottom, right? Okay, what we need, we put on top, and what we have, we put on the bottom, guys. So I need 70% and I have 30%. So I'm just going to say 293,000, which is 293,100, which is 30%, multiplied by 70% that I need, divided by 30% that I have. Let me share my calculator with you guys. I said I have 293,100 and multiply it with 70 divide by 30, and that gives me 683,900, meaning 683,900. It is our net profit after tax. 683,900. Sorry guys, 900. It is our net profit after tax. So meaning, like I told you guys, sometimes, or when you write your junior examination, trial examination, or your final examination, one or two or three of this information, it will not be given. You will be expected to fill in. So it is very important to know this by heart, guys. So you must put it on the wall at your bedroom and study each and every night before you sleep. Just put this into your heart, guys. Like I'm telling you, that's what I did when I was in matric, guys. And shares repurchased. So now we are going to go to the information of shares repurchased. Shares that are repurchased. So now that we have calculated net profit after tax, like you have seen, it is very simple. We are now going to calculate shares that were repurchased. Okay, on 1 October 2018, the company repurchased 60,000 shares at 9 rand per share. Like I told you guys, 9 rand per share, it is the total price per share that was paid, meaning this one we take it into we take it to cash flow statement. So, and this one we take it to note number 7, which is ordinary share capital. But for this question, like I told you that I have 2019 question paper. So the previous question, it was question 4, and this one is question 5. We are not expected to do ordinary share capital. And for this one, it goes to ordinary share capital. So, and the price that is above the average share price, it is that one that we're going to take it to what you call retained income, guys. So we are just going to say 9 rand minus 8 rand, 0.04. Let me share my calculator, and that will be our price above the average price is 9.00 minus by 8.04, and that gives us 0.96, meaning 96 cents. It is the price that is above the average share price, 96 cents, guys. So we are going to calculate we are going to calculate our price, our shares repurchased with the price that is above the average share price, which is 96 cents. So we're going to say 60,000 shares multiplied by 0.96. Let me calculate it with you guys before we put it into our answer sheet. 60,000 and multiply it by 0.96, and that gives me 57,600, meaning 57,600. It is the price that is above the average share price. So meaning here I'm going to 57,600, and I will show you how we calculate it. We said is 60,000 multiplied by 0.96, and that gave us 57,600, guys. Let me show again here. So I did not show how we calculated it. We said 293,100, and we multiplied it by 70 divided by 30. Then that's it, guys. So we said 293,000, and then we multiplied it by 70 divided by 30, and that gave us 683,900. So now that we have shares repurchased and net profit after tax, we are now going to calculate ordinary share dividends. But before we find ordinary share dividends, we must firstly calculate this one, interim dividends and final dividends. Okay, let us go to our question paper. Okay, about interim dividends, they say interim dividends of 25 cents per share were paid on 15 September 2018. So now it is very important to note that the date that we paid dividends, and the date that we have repurchased the shares and bought additional shares, and this one. Okay, so we are just going to say 900,000 shares, because we have repurchased shares when 1 October 2018, and we have paid dividends before we repurchase, meaning these shares qualified for interim dividends, right? So I'm just going to say the shares that were issued at the beginning of the year, 900,000 shares plus 100,000 shares, and that gives us 1 million shares, guys. This is very simple. 900,000 shares plus 100,000 shares, and that gives us 1 million shares. And now we're going to say 1 million shares multiplied by 0.25 cents that we paid per share, and we will find how much did we pay for interim dividends. So we're just going to say 1 million, right? And then we're going to multiply it with how much? 0.25, that we say is the price per share. So we have paid 0.25 per share, and that gives us 250,000, right? That is interim dividends. So we are going to record it in our answer sheet. 250,000 interim dividends. Then it's 250,000, right? So now that we have 250,000, I'm going to show here. Sorry for this. Sorry for this. So we said is how much? We said how did we calculate it? 1 million, 1, 2, 3, 1, 2, 3. Then we multiplied it by how much? 0.25 cents per share, and that gave us 250,000. If you don't want to use this method, the literacy method, you can use that one of multiply 1 million multiplied by 25%, and for this one, you can say just say 60,000 multiplied by 96%. Okay, So now that we're going to final dividends, and as you remember, guys, final dividends was not given how much is final dividends. So we're just told that final dividends were declared on 28 February 2019. And if we did not have this information, and you were given the price that was paid per share, you're just going to say 1 million shares subtract 60,000, because on the 28th of February 2019, these shares were no longer having this 60,000 shares, right? So for now that we have shareholders for dividends, like I told you, shareholders for dividends, it is a final dividend. So last year we declared, or we recommended this um price for shares, okay, to our shareholders, right? And then this year we recommended, or we declared 206,800 to our shareholders. We have promised them that we will pay them in the next financial year. So now we are going to record our 206,800 into our answer sheet. 206,800, right? I hope I'm not recording any invalid figures, right? So now that we have interim dividends and final dividends, we're just going to say interim dividends plus final dividends, and that give us ordinary share dividends. And sorry for this one, I don't know why I forget to put brackets, because this thing it's supposed to be it has to be right, to be in brackets. I don't know why this thing is. So we're just going to say 250,000 plus 206,000. Let's go. Let me share my calculator with you guys so that we can calculate. Is 250,000 plus 206,800. Sorry, 800. That gives us 456,800. And 456,800, we are going to record it. 456,800, we're going to record it here. 456,800, right? And 456,800 is our ordinary share dividends. So now that we have balance at the beginning, net profit after tax, shares repurchased, ordinary share dividends, interim dividends, and whatever that we have, so we are now going to be able to calculate how much is our balance at the end of the year, because remember, guys, this was not given. So we're just going to say 141,500 plus 683,900, subtract 57,600, and subtract 456,800. Let me share my calculator with you guys so that we can calculate. We said is 141,500, which is the balance at the beginning of the year, plus 683,900, which is net profit after tax, and then subtract the shares repurchase, which is how much? 57,600, and subtract again 456,800, which is ordinary share dividends, and that gives us 311,000, meaning 311,000. It is our balance at the end of the year. 311,000. Right. So now that we have finished preparing two notes here, one from question 5, or one from question 4 and one from question 5, you're now going to check on our marking guideline whether what we've calculated is correct or not. And guys, remember, if you don't understand, you are welcome to text me on my WhatsApp and I will explain further to you how to calculate. I'm offering consultations too. Okay, so let me see. 206,800. So now I'm going to share my marking guideline. We're going to start with this one. Rule of ordinary share, capital from question 4. Like I told you guys, we'll remember this one of the dates. Where is that one? This one, I told you that 30 November 2018 and 30 September 2018, we have bought additional shares before we have issued additional shares. So we have issued additional shares before we repurchase. So I told you it is not that difficult. There it is, guys. You see, you can either calculate by firstly issuing the shares before you repurchase. Okay, but the easiest way, it is this one, because this one, you see, there are so many amounts, you see, but it is the same, guys. But for us, we have calculated this one. Let me highlight what we have done in this note. So we said when you're calculating, this was given and this was given, right? And this was also given 1,200,000 shares. So when you want to calculate how much it is your shares that were repurchased, we said you're going to say 4,800,000 divided by 1,200,000, and then you get your average share price. It is an easy way to get your average share price. And you say 150,000 multiplied by 4 rands, and that gives us 600,000. As you remember, guys, it gave us 600,000. And 850,000 that we got, we said that this one, it is balancing figure. This one is balancing figure. When you have all these three, you can calculate this one by just balancing the figure, guys. You must balance the figure, guys. Okay, so, and we have this one, shares issued at the end. We said we got it by saying 1,200,000 shares that were issued at the beginning, and subtract this one that were repurchased and add this one that were issued during the year, and we have 1,900,000 all in all. And to get this one, we say 9,300,000 plus 600,000 minus 1,800,000. What was subtracted, you are now going to add it, and what was added, you are now going to subtract it when you go up, right? And now let me show this one. We have calculated it. There it is. Just what I have done. We said when we this one, it was given. So net profit after tax, I said it is income tax multiplied by 70 divided by 30. The reason why I said 70 divided by 30 is because we want 70 and we have 30. And remember, guys, net profit after tax depends on the percentage of income tax, right? And funds is used for repurchase of shares. Guys, I told you that this one, it was just simple. You just take your 9 rands and then you subtract your 8 rand, 04 cents, and then you get your 96 cents. And you see, this 12 marks, it's just simple to get all these marks. Then you get 57,600. And then for ordinary share dividends, like I said, interim dividends, when you are not giving any information with the price of interim dividends, just no ordinary share dividends. It is the ordinary share dividends that you will find from the information from trial balance. It will be your interim dividends, and for final dividends, that one that you'll find that talks about shareholders for dividends, it will be your final dividends. And guys, please just note that I offer free consultations, but only if you watch and subscribe my videos. And guys, let us subscribe, guys, so that we can reach more subscribers. And for this one, like I told you guys, when you see that you have correct balance at the end of the year, which was not given, which means everything is correct, because you can't have this one correct and there is one that is incorrect, unless you have calculated the correct answer but written the wrong answer, right? And this one, it is the correct one. So that's it for today, and thank you guys, and please guys subscribe guys, so that we can reach more subscribers, guys, so that we can um share the information or share the knowledge that we have with you guys. And this is very easy, guys, and this is very easy, guys. So I hope if you don't understand whatever that we talked about, you will just text me on my WhatsApp number. My contact number is 067 333 2389. And thank you.